Stocks indicating a higher open on the hopes of a U.S. budget deal. World markets are following the U.S. lead. The rally that started November 16th continues to show commitment. I'm Taylor Schrontz, and the morning call starts right now.
Good morning, I'm Scott Rudd, the Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. Scott, we had a very interesting day yesterday. We opened up lower. Some people got stopped out because as we went into the close, we saw some really impressive action across multiple sectors. And a key theme that you and I have been speaking about is that November 16th key day where we saw that reversal and measuring commitment from there on.
Right, once you see a reversal like you saw on November 16th, you have to measure it. You have to see, is it just a trade or can it be a new inflection point? And since that reversal happened on November 16th, we've seen a lot of reasons to stay with the rally. We've seen commitment. We've seen people buying higher. We've seen some nice relative strength in key stocks. Yesterday, like you said, we came down, filled the gap, but we held the Fibonacci retracement level we were talking about. We were talking about the 38.2% Fibonacci retracement. Came in, that was like what, like 1388 on the SPX. On the spiders, it was like 138.75. We touched a little bit above it, and then we reversed hard into the close, showing that there is still appetite for stock even in these areas.
Before we get into today's key levels, I think we should take a look at what's happened since October 2011 and show how we identify these patterns of commitment within the market.
Yeah, because patterns repeat themselves. So if you look at past outside days and you measure them, it could give you the clues on whether or not this one would stick, and that's what we've been watching. So if we go to the overall macro chart here of the S&P, I'll get into it right now because that's the short term. Short term, just real quickly, here was the outside day, November 16th. Here was your gap up. Okay, went sideways, showing commitment. Follow through into Thanksgiving Friday, and then we proved that this range could be viable as we are now heading into the 50-day moving average, which is right around 142.41. If you look at the overall SPX and you look at the macro pattern, okay, we'll take a longer term look at it. We talk about macro patterns and how you can maneuver your portfolio and how patterns repeat themselves. Look at this outside day. This was the outside day on October 4th, 2011. Led to a major move to about 1300. Then we had that wedge pattern, okay, a pattern of consolidation of a move that just took place. And then look at this. This was the first quarter of this year. Nice move. Remember that move? We followed the 8 and 21-day moving average. Then what happened? Your head and shoulders top, your left shoulder, your head, your right shoulder, which led to a nice correction. And if you saw this, you could have maneuvered, taken some risk off, gotten that short, who knows? But then look at this, another outside day. If you look at this outside day a little closer, you will see here's your outside day, quick appetite for stock. Then it held higher. That is always important. If you hold higher, you show commitment. And then this is what took place from June all the way into September when we started getting that faulty action. Right here could have been your way out, right? Right around 1430 when we broke this trend line. So you broke the trend line, we had another mini correction, and then this is that November 16th outside day. So far acting very, very well. Here it is. It's when you could have switched gears. You had a nice active trade, saw that we had some follow through, and now look where we are. And the 50 days right here, 1423. We might even get there, today / tomorrow. But at this point, I think you trim a little bit into that.
It almost looks like the pattern setting up just like it did last year, going into trade for Q1. And I think even like we spoke about with our Ameritrade idea, that once we get some sort of fiscal cliff resolution, whether it's good or bad, once we get clarity back into the market, that's going to be key, and you're going to see that cash come back in. So Q1 13 looks like it might mirror what we saw for 2012.
Right, we can continue a little bit higher, and everyone keeps asking me, like, Red Dog, are we going to make new highs in the year? We're going to go above 1474. That doesn't really matter. Okay, you can make money without making new highs. From what 1350 where we just were at almost 1420. That's 70 handles. And even if we don't make new highs, there will be stocks that show performance. So it will be relative strength. And then after the consolidation, like you said, 2013, maybe we have another first quarter move like we saw this year, but maybe not as long.
I think that's so key because so many investors and traders focus on, oh, is S&P going to make new highs and lows, whatever the case is. But if you tactically maneuver your portfolio, it doesn't really matter. You have to identify your spots and find those relative out and underperformers like we're going to look at for the sector spotlight. We're going to take a look at the ag names. We've spoken about this so many times. It was one of my picks for 2012. What's interesting here is this tends to be a seasonal trade. December historically has been a good month for these names. Let's kick it off and take a look at MOO, which is the ETF for the sector, to see how the chart is lining up for this trade.
Yeah, it looks nice and tight. You have a descending channel, which is good because once you break above it, then you get some upside motion. And recently, I haven't been focusing on the ags because there's been better places. But if you time it correctly, like you did, I think over the summer, you could get a lot of bang for the buck. So if you look here with MOO, you will see look at this little descending channel right here, or descending trend line. It is holding higher. It held the majority of this range. If you look at the low that was put in May, June, you had some corrective activity right in front of this old resistance, which comes in right here. But at this particular point, if it is seasonal and they're going to go, you take a close look here, this 52 area is really big. If we can get above 52 and show some power and ignite, I do think this group will get back on the traders' radar. So at this particular point, it's worth putting on your forefront.
One name that's been outperforming within this space is Monsanto. It's touching some 52-week highs here, and as we know, 52-week highs beget 52-week highs. The key here is they own the space in genetically modified seeds. They've got the technology, and they're continuing to make key investments.
Yeah, and this one has been one of the go-to stocks. And I think it would be healthy for the overall group if you could see some 52-week highs. So bring attention, because I don't see that many high-quality names in this group that are looking ready to go. So if one goes, then some attention goes elsewhere. So if you look at Monsanto, you will see, though, here it's been in a nice trend, okay, all the way back since here. Okay, it's a little bit sloppy, but look where it is. It's right back at these highs. So if you take a closer look here to see what that level is, I'll show you it on my chart once I maneuver it a little bit better for you. That's right around here. Okay, it's right around 92. So if we can get above 92 and hold above it and go, it could bring some attention to this group, a group that hasn't had a lot of love in the last month or so.
Moving along to AGU, this name could get really interesting here because we're seeing some pressure from its largest shareholder, Jana, for some corporate action. It's a big conglomerate, and as we all know, big conglomerates aren't necessarily in favor right now, so you might have some speculation on breakup here.
Yeah, and if you weren't involved in it, you had a huge gap down. There's been some pain here. So if you want to just take an approach, getting it with it now, you look at the chart, and the chart actually is pretty interesting for me. You look here, this was that big gap down, trapped a lot of people. That you couldn't really see it that much. It was near the highs, looking as if it was going to continue, and then bam. All right, so with that said, it's come back up. You had a nice little gap right here that's showing some commitment to it. I think as a trade, I would wait to see if it can get above this area. This area is 101.82. Keep it on the radar, above 101.82. Perhaps it tries to fill what's left of this unopened gap.
Moving along to the phosphate producers, we could take a look at Mosaic and Potash together. I personally have recommended a March 2013 55-65 call spread on Mosaic. I think once we get some more clarity into inventory and supply and demand with Chinese and Indian contracts, you'll start to see the bid come back into these names. And we've seen a name like Mosaic, which has traded really nice over the past couple of weeks.
Yes, and this one you have to really pick your spots because it's so far away from highs. It's so it's more of an intermediate trend trade until finally that changes. And if you look at Mosaic, you will see last time you really loved this name, what felt like right around here at this Red Dog Resort, right around there, and you had a really nice move. But it couldn't get through this resistance, and then the market corrected, and so did this. So when it broke this support, you could have get out of the way because you never know where it's going to go to. But now you look closer, okay, and see where it's trading right now. You have a few things that I kind of like here on the short term if you're not involved to get involved. Here's your gap up, okay? Gapped up from this, so this is almost like a little bit of an island bottom. You had some quick follow through to the upside, corrected a little bit here. I would think that if you're trying to time this one and you think it's going to get better or back in vogue for December, it starts getting above 54 and holds it, you could see it move back to where it fell off from. So percentage-wise from the 52 area, if you're a believer in this name, back to, 56 to 62 where it'll get resistance is a nice move from here if you're not involved in the name yet.
Moving along to CF, it's the largest producer in North America, and this stock has been helped on its margins because one of its largest inputs is natural gas. And as we know, from 2011 to 2012, there's been some pressure on nat gas prices, so that's where the margins have expanded a bit because there's less input cost.
This one, like Mosaic, has been a bit more of a leader. It's made 52-week highs. It's rewarded investors, a little bit more than just a trade. And here it looks like there's a setup, something for maybe even my guys to watch and myself. If you look at the chart here, you will see, it corrected since the highs. Okay, this was a trend that was intact that broke right around October. Okay, so if you do trade trends and this is when it went below the moving averages, you could have got out of the way. And then look at this trend line. Okay, this is a descending channel right there that held. You look at this key moving average, it held here, broke above, holding higher. If you're not involved in this trade, I think it starts to get better looking once it gets above 210 and holds above there with some authority, and that would also show some leadership alongside Monsanto, and maybe the group gets more attention.
Okay, well I certainly hope it does, because this is one I really like for the remainder of 2012 and really the story going into 2013. We're going to a quick commercial, and when we come back we dive into the trenches.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the Morning Call. We're going to dive into the trenches and take a look at stocks that have announced special dividends. This is kind of a catch-22 here. If you're a short-term momentum trader, there was a nice opportunity if you caught that bid. As a longer-term investor, the dividends are created just with cash that's on hand, so there's not much shareholder value there. We're going to take a look at 5 names that announced the special dividend and then talk about a quick few that we think could potentially announce going forward. Costco being one of them that announced yesterday.
Yeah, Costco has been a nice macro hold. It's been, all year long. It's been somewhat of a leader. It's been a little faulty lately with some of them. But you look at the chart. Lots of reasons to stay involved. It held above the moving average. A lot of stocks broke, started to act better, and then boom, special dividend announcement. Look at that, closing near the highs, right back near the highs of the year. So investors in Costco getting paid at this particular point. I wouldn't just go chase it after this type of move, like you said, because it is a one-time thing. But here's the old highs. Here's your gap to to gauge it against. It starts to stay above this 100 for a little while. You can get another trade through there. And if you're a macro investor, retail has been a place to be. And now there's even more reasons with these special dividends. Moving
along to Las Vegas Sands, and this is a name that we talk about frequently on the Morning Call. They announced a special dividend. They have the cash on hand to do so, but the balance sheet also has 2.5 times more debt on it than it does cash.
Yeah, so it's like a catch-22.
Right.
I haven't really been that active in this group because it hasn't been leading. It's been very choppy, but now it looks set up to go through resistance. You look here at LVS and you will see that, here you are. This is big-time resistance coming into play. This is what, 47.54. You do have a nice little gap up here. It's holding it. So for my traders, if we could start getting above this 47.03 area, it seems like it can continue to the upside. And just real quickly for that group, Win also looking decent, closed strong yesterday. And even the tail that wags the dog, I think MGM has a little bit of a tight pattern. If you want a cheapie, I think through $10 it holds it. This thing could see back to 11.43 by the end of the year.
Moving along to Buckle, it paid out a $4.50 special one-time dividend, which was double of what it did last year, ticker BKE.
BKE, let's take a quick look at it technically. On the highs, rewarding investors. This one actually was, I didn't say you had to get lucky, but you were in the right place because this also, has been holding higher, riding the 8-day moving average. There's been a lot of reasons to be in this. Besides that, even giving you another entry right around here. So at this particular point, I see no reason or any type of faulty action that if you're involved to get out, except for maybe trim some into strength. But this is showing leadership right here. To initiate right here is tricky, but if you own it, stay long some, but trim some into the strength.
And to wrap up the special dividend names, Brown-Forman and Dillard's. This is interesting because these are 2 family-controlled stocks. They don't have enough cash on hand, but issued that one-time dividend, again, trying to beat that whole fiscal cliff resolution.
I love the fact that these private companies are putting their middle finger up to the fiscal cliff and saying, you know what, we don't want our guys to go from 15% to 40%. We're going to give them their money now, so this way they get to keep their money, not get taxed on it so many different times.
Right. But what I think is interesting here is that you're going to see a lot of conversation and speculation into what's the next one-time dividend player, which can set up some really interesting plays for your momentum traders. I happen to love mega cap tech for many long-term reasons. Everyone that watches the show knows I love IBM. It's a holding I will have forever and ever, and actually just trade options around the position. But names like IBM, Oracle, CA, Apple, all these cash-rich tech companies, there could potentially be some opportunity in there regardless of the long-term perspective.
Right, and you don't want to trade it just for that, but these stocks have cash if they have the right charts, and all of a sudden you're involved in it, and then you're there for that night that they declare this special dividend. You're coming in the next day really happy. So just pick and choose wisely. Some act better than others, and just know that if you're getting involved for just a single play, it's not probably the smartest thing to do, but there is opportunity. And mega cap tech, it does perform at times.
Speaking of mega cap tech, let's move along to quick hits for quick cash, and we'll kick it off with Apple. I love this stock here for the holiday 2012 bid. Not much more beyond that. I'm a little bit concerned about the product dependency, but right now I have a December 640, 645 call spread on, looking to capture that bid.
Okay, well, at this point, it's acting very well. November 16th, it was the blaring red dog reversal. This was the stock and the reason why I got back long the market. And if you look here, this is that date. Boom. Here's your reversal. 522 is that entry. From there, quick move up to about 570, went sideways, consolidated, a nice bull flag here. Was another nice trade above 572, went as high as 590, same type of pattern, consolidating here again. So I am long some. If it does get above this 590.42, you could see a quick move to test at 200-day at 599, and then you do have really big resistance coming in somewhere around 615.
Over the past month, Scott and I have been doing some work on the online brokers, and my favorite of the group is Ameritrade. Multiple makes sense, has the highest operating profit margins. You're getting paid 2.3% on the dividend yield to hold this name. What I like is once we get the fiscal cliff resolution out of the way, the retail investor is going to come back to the market. They're sick of earning nothing in a low interest rate environment. You have all that cash on hand. Average daily trading volume was significantly down for 2012, but this stock caught a nice bid yesterday because its CEO mentioned in an investor presentation that they expect average daily volume to go up 7% month over month into 2013.
Well, it would be nice to get some more volume back in the market. And as far as putting this on the radar, great stock, great situation. I wasn't really watching it. And then, yesterday, boom, look at this nice little flag type pattern off the low. Big percentage gain yesterday, right into resistance. I think it might pause here around 1650, but no reason why I can't get back to 1715 or even close to 18. Got to look at my friends over at Schwab also. I know I mentioned that the other day. This too has a little bit of a bull type flag right here. So if you're looking to see if another one could have an Ameritrade type move, you look right here. This one looks okay. It's got to clear 13, I would say 30 in order to get back to the 14.50 range.
Moving along to Amazon, this had a nice day yesterday, up 1.5%. Again, one of the big surprises for 2012 has been the strength of the consumer. I think you're going to continue to see some of that action going through the end of the year.
Yes, and Amazon is one of those stocks that the market loves to see rally. Some people don't because they just short it. They think, how could this happen? The PE's through the roof. But meanwhile, they don't understand that once their margins get a little bit better, their PE comes down and their profits expand, and boom. All I know is that the stock can continue. You look here at the chart, it held higher versus a lot of other high beta names, and it's on its way, back towards the highs. I think this arrow was written here when it was on its way. At this point, I don't think I see a reason to short it. I tried it this day. Remember, it tried to break through and come back below, and it didn't really show any weakness, so I got out of it, which it was fine to try. Just don't be stubborn. You want to look at the macro chart here. You take a look to see which one of these are closest to their 52-week highs. It's not quite there. I wouldn't say go out with two arms and be a buyer of this into this gap open. Some guys might try and fade it. If you're long it, stick with it. It's definitely a place to be for the holidays and it's showing leadership. But at this spot, it's just a little tricky here.
Another name, and I'm going to do a victory lap here, that we've had some pretty good success with is TJ Maxx, really picking our spots throughout 2012. And again, when we came in going into the Thanksgiving holiday weekend, talking about this on November 16th, and you can see where the move and where it's capturing its bid here. It broke a key level yesterday, going into the close at 44. I think you're still going to continue to see some more momentum in this. I personally have a 42.5, 45 call spread on it for this month, for the same reason I have Apple on, for capturing that holiday 2012 bid. And because this name consistently beats on total and same-store sales, fundamentally, and I think the chart confirms that price action.
Yeah, and in this rally, it's been performing well, and you want to find stocks to perform well or even outperform. And this one we talked about gave you a nice price pattern right here. I think we spoke about it somewhere in here, saying that if you can get above this, what was it, about 43.21, it could be a good trade. Went through it. Had a little choppy action, which the market did also, held above it, and then yesterday performed well with the market. It's probably opening up above this pivot. Next stop here is 45 to about 47, so I think you could stay with TJ Maxx.
Yeah, I think this is going to be one just for multiple reasons. Let's wrap it up with one. You did an excellent job with this one yesterday, Google. Just such a great call on it.
Well, it's been somewhat out of play,
right.
And my little Google sense said, okay, Apple just had a big move, went to 690, or I'm sorry, 590. It's going to rest, and when that rests, something typically wakes up, so let's watch Google. And then 2 days ago I started talking about let's just watch it. I looked at the chart pattern, and then on this day you saw relative strength. That's all I saw. I saw relative strength, nice descending little channel here, great spot to get involved, saying okay, if it breaks above 675 we can get in more. Yesterday we had a down open. It was one of the first things to go positive, so when something goes positive in the beginning when the market's still red, typically that's a place that's going to provide you alpha for the rest of the day. Boom, closed strong. Today it's up $4 or $5. If you bought it 3 days ago, definitely trim and trail some, but I do think at some particular point. You could see 700 to 705. So just try and leave some on. I know it feels good to take 15, 20 points and book it, but try and stay with some. I'm going to try and stay with some, but it's not that easy because you see the dollar signs. But overall, it looks like it can go higher.
Yeah, I agree. I think
and you can time them.
I think so too. And I also think going into 2013, like we've spoken about before, if I had to pick an Apple or a Google, which is such a hot debate, I think I would look at Google because of the multiple business lines. I'm a little bit concerned about the product dependency with Apple. So
I hear you, and I think a lot of people unfortunately make that debate where they're both leaders. You could probably be in both,
right?
But you could time them differently. Like last week the place to be was Apple, and then now Apple's digesting. The last 3 days the place to be was Google, and now maybe you turn back towards Apple. So as a trader, you could pick and choose what has the best pattern at the right time. I guess as an investor that might not have multiples of cash in front of them, they have to pick and choose their battles. Pick which one you want, and I do think that there are people saying for Apple, for next year, just to go back one more time because I have to talk about it, they're saying that you go to the weekly chart of Apple and you do see some type of longer term head and shoulders top formation where here's the left shoulder, here is a bigger head, okay? And right now we're in the process of making the right shoulder, but at this point the right shoulder could take you all the way up to this area, and if it does get to here and we start to see weakness and it turns lower, that's going to be a pretty overall negative pattern. I'm not saying it's going to happen. I'm still a bullish bias right now, but we'll have to watch that action coming into 2013. I think this will be a big teller. If it just goes and it goes through the highs and they split the stock and it gets added to the Dow,
I would love that.
All those things could happen. That's not the case. But if it does start to falter and Samsung keeps gaining and people, the margins keep getting crushed, that could be a problem for the market in 2013.
Right, you're absolutely right. All right, guys, everyone have a great week trading. Catch Scott at the end of the day as he wraps up the charts for us on Options Profits, Real Money Pro, and T3Live.com.